As we start the new year, I like to recap some of the themes and ideas of the past 12 months and see how they panned out, as well as evaluate my analysis. We're looking at the dollar Mexican peso, and I think it's a good example to show viewers the importance of alternate wave counts, as well as being flexible and willing to adjust the wave count as further price action unfolds. Sometimes wave counts stand out, and you can spot them within a few minutes. Other times you may have to wait until the market clears up and a clear pattern develops, as was the case on dollar Mexican peso. Towards the end of 2020, we were tracking several US dollar pairs that were in the late stages of completing an impulse from their respective 2020 highs. We suspected the price action over the December-January timeframe was taking the form of a diagonal, which suggested an impending reversal. A common question we get asked a lot is, what type of correction can we expect to see in the second wave position of an impulse? And how large of a correction can we expect? It's been my experience that you'll likely encounter a zigzag, although I have seen my fair share of complex corrections. A common retracement target would be a test of the previous fourth wave at one lesser degree. In dollar Mexican peso, that target resides at 22.70. Whenever I am counting a correction, I like to keep it simple and start off looking for a zigzag and adjust as needed if price action dictates that we need to consider something more complex. I see far too many Elliott wave users start off looking for complex corrections, and most corrections are a zigzag or a flat. Initially we were looking for an advancing 5 waves to complete an impulse for wave A of a zigzag, and while there were a few minor adjustments, the overall trend from 1954 was up, so we remained bullish and was looking for the dollar to continue higher. As the price action continued to move higher, we kept lifting the key level. However, things took a detour around the middle of March. As you can see, we were aggressively bullish and looking for a swift move higher in a third of a third wave. Up until then, we didn't have a reason to consider other options, as the price action from 2055 appeared to be impulsive and fitted the profile of a third wave. This is where the importance of key levels comes into focus. Not only do they offer a point of ruin and signal that your wave count is wrong, they also offer a safety net to protect against large losses. So with the break of 2055, we adjusted the wave count to reflect what we thought was developing. The pullback from 2164 ended up being very deep and subsequently gave us a reason to consider the pullback was likely wave B of a still unfolding zigzag. With the break of 2033, the wave X extreme, it suggested wave B was complete and wave C was unfolding. The minimum expectation was a move above 2164, the wave A extreme. Over the next few months, we were torn between several scenarios, as the pattern was difficult to pinpoint, and we moved to a temporary neutral bias pending further price action. After several false breakouts to the upside, this pair finally looked like it was going to move above 2164. But even when we thought we had a good handle on what was developing, this pair again threw several curveballs, and towards the end of November, we introduced an alternate scenario which suggested the back and forth price action that had developed over several months may have been part of a rare expanded ending diagonal, which would explain the whipsaw. With the print above 2164, dollar Mexican peso had met the minimum expectations to complete an upward correction for wave 2. However, lacking any evidence wave 2 was complete, we decided that while 2098 remained intact, the wave 1 extreme, we would give the zigzag scenario the benefit of the doubt and look higher towards the previous fourth wave at 2270 to complete the remaining subdivisions of an impulse, wave C. The weakness over the last few weeks hints that an upward correction in wave 2 is complete, and the dollar will weaken against the peso. So what we thought would end up being a simple zigzag to complete wave 2 appears to have developed into a double zigzag. Counting in real time can be challenging at times when things don't pan out the way you think and adjustments have to be made. Respecting the price action and being flexible will pay dividends in the long run, and will keep you from forcing your bias on the market. So the next time you're struggling to narrow down a pattern, take a step back and consider waiting for the price action to clear up. It's okay to tell yourself you don't understand what is developing, as eventually a pattern will emerge that you do understand. Having a conviction to trade requires you to have a pattern that you're confident in. It's one thing to count waves in real time, it's another to find opportunity to trade when you're not confident in the wave count. As they say, no trade is a trade. Thanks for watching.